right, on Earnings Edge today, we're speaking about Biocon. Peter Bains, the Group CEO of Biocon, joining us in to talk about the quarter gone by and the outlook ahead. Hi, Peter. Thank you so much for speaking with us here at NDTV Profit. Always a pleasure.
Thank you. Good morning.
All right. So when I'm looking at your numbers, I think what a lot of analysts are a little worried about are the EBITDA numbers. And let me just jump straight to that, because if I take out the 1,057 crores from your net profits, it's seeming like a bit of a weak quarter. EBITDA has also come down in large part because of the generics business. Is this something that you were expecting? Has quarter one gone by as planned?
Yes, I mean, quarter one has come in very much in line with our expectations and our outlook. I think we've seen on an underlying basis, so stripping out the Eris transaction, we've seen a relatively flat revenue performance, but that's a mix across the businesses. And important to point out that in the biosimilars business, which is the largest business in the group, we saw underlying growth of 11% on the quarter on a comparable basis, and that offset degrowth in the services business of 2% and the generics of 6%. On the EBITDA question, that also came in line with expectations. The group EBITDA is still a healthy 20%, and in the generics business, it's lower at 9%. In the biosimilars business, it's a pretty healthy 23%. So we're not uncomfortable with that at this point in the evolution of the business, and we'll see that expanding in the second half of the year and beyond as we begin to sort of transition toward a more consistent acceleration.
Absolutely, and we'll come to each of those segment-wise businesses in a bit of detail, but just a word on the margins. Now, some of that impact has come because of employee expenses, which have come to 22%. And just trying to understand if this is a trend that continues, Peter, because now you also have a higher base.
And I think that's the key. We've completed the transition now, and it's largely the biologics business with the transition now complete. So we've taken on all the headcount, all the teams, all the expertise now to support the business. You'll have seen a reduction in some of the one-time costs that offset that. But now we're stabilizing and consolidating post the transition, and we'll build forward from there.
Okay, let's come to biosimilars. You talked about how you saw a year-on-year growth of 11%. The EBITDA margins are pretty robust at 30%. Do you see this at a sustained level, which then, of course, contributes to your consolidated margins, 18% this time? Where do you see that growing, and how big or how fast does the biosimilars business move?
Sure. So yes, we do see this, obviously moving forward. And in some ways, this is the consolidated business profile now. We've grown 11%. That's been through growing market share in key markets like the United States and our oncology franchise and in our insulin franchise, stable market share performance in Europe, and some very good growth in the emerging markets coming from existing products and extending our reach into new markets. Now, looking forward, we continue to see that traction this year, and then beyond that, the growth will be driven by new product introductions, that we are lining up, and that's an exciting prospect with 5 new product launches coming in the next 2 years. This is mid and longer term now in the United States, and 3 products coming into Europe in that same time frame. So we're consolidating the business this year, but there's good traction, as we've seen on the comparable growth in the first quarter. That will transition to acceleration with the introduction of this new product flow. And of course, we believe that will play through the P&L and expand the margins as well.
Let's talk a little bit more in detail on that product flow. What are the big drivers coming in there? In your con call, you talked about the GLP portfolio. Can you expand on that?
Sure. GLPs, are very, very exciting prospect and priority for us in the generics business. The GLP peptides, underpinning both diabetes and obesity, very, very large markets with long-term growth due to the development of those diseases right across the world. We're at the front of that in the generics with our liraglutide product, but that is just the front. Behind that, we're developing semaglutide, tirzepatide, and others, and intend to play a lead role in the generic, in the GLP generic market opportunity. Importantly, this has a very strong read across to our biosimilars business, which has a long-standing insulins business and a strong heritage there as a global player. And of course, insulins play to diabetes, and diabetes and obesity are very strongly linked in terms of comorbidities and disease progression. So we have a lot of opportunity there and a very unique position. I think one of the only companies with both GLPs and insulins to play into this sort of very, very large diabetes and obesity market going forward.
What is the timeline you see for GLP's availability in India and in other markets as far as you're concerned in terms of permissions? A lot of, I wouldn't say controversy, but a lot of different views on GLP as well out there in the public domain. Any comments on that too?
Sure. So on the sort of timetable front, I mean, we have approval in the UK. We'll be looking to launch in the UK and select other markets this fiscal. Our strategy is really global here, and we are pursuing regulatory approvals on a global basis to bring those products to patients, and we'll do that, in both a direct to customer model, and we'll work with partners elsewhere. As I said in the earnings call, we've just partnered with a strong specialty player, Handok, in Korea, for example. We're in dialogue with the Indian regulator to look at the opportunity to bring our product here. And in terms of what we see in the marketplace, there's no question that diabetes and obesity have enormous current epidemiology. 10-12% of global population is the estimate for diabetes, and growing. And obesity, I think, perhaps even higher. And really, these are comorbid diseases that cause devastating consequences in terms of disease progression, cardiovascular disease, renal disease, liver disease, reproductive disorders, and even bone and skeletal problems. Diabetes is the highest cause of blindness worldwide. So there's huge clinical requirement here and an enormous unmet need. And, we intend to play our part in fulfilling that need on a global basis.
And on the second part, I mean, my fault, I asked you both those questions bunched up, but a lot of different views on this group of drugs. I mean, obviously, they're being used as weight loss drugs in some parts of the world. A lot of talk about the possible side effects, long term. Do we know enough about it? Just your commentary on all of that chatter.
So in terms of the use of them, there is a very, very clear, very large, and very material clinical utilization. Obesity is a serious disease which causes significant downstream pathologies, as I've described, cardiovascular disease, renal disease, liver disease, and so forth. These are not trivial disorders as a consequence of clinical obesity. So we're very, very clear on that there's a significant unmet need that is going to grow worldwide. Obesity is a global phenomenon right across all markets in the world as a consequence of lifestyle and diet. So we shouldn't underestimate the severity of the consequences of obesity.
Let's come to the research side of the business as well, Peter, and what we've seen with Syngene. Now, US biotech funding has been down. The discovery services revenue in line was also hit by that dip. What is the outlook you see for there? Do you see some of that funding coming back and for research services in Syngene?
Yes, we do. And we already see those green shoots. Funding is flowing back into biotech from US VC. It does take a quarter or so to play through. And as Syngene has guided, they expect to see this pick up in the second half of the year. and lay on top of the underlying growth that they're seeing in their dedicated services business and biomanufacturing. And I think Syngene has clearly guided, that it's retained its guidance of high single to low double-digit growth at the top line for the full year, and EBITDA in the high 20s. So I think that's all on track. We see, headwinds that we faced, that the entire sector has faced, easing, and then we see the tailwind beginning to emerge. And with regard to the Biosecure Act, we're seeing a very high level of inquiry consequent to that. Again, that won't play through in a quarter or 2 quarters. It'll play through over the coming years. But Syngene's strengths and capability here position it to be very well placed to capitalize on that tailwind as well.
Just want to get a sense from you on how you see price erosion trends in the US moving forward. A lot of companies in the space that we talk to say that price erosion they see will go from double digits to single digits. What is your view here, Peter?
Sure, I think we're probably aligned with that. I mean, pricing pressures exist. They're a function of competitive intensity and supply, and they can fluctuate. I think we see a little bit of easing on the annual price declines there. And of course, it depends on the channel as well. I think you'll see less in some channels than you will in others. But it's a well-known dynamic that there's a range and there's some fluctuations. And I think, we're well aware of those and don't see any structural changes that will impede our planning going forward.
Just last bit on whether you see this change coming in that you're describing by Q2 or further. Is Q2 also going to be overall on a consolidated level a bit subdued before some of the changes which you've mentioned in every segment really start kicking in?
Yes, that's clearly our view. I gave that sort of outlook at the Q4 results, and I repeated it today. I think Q2 we'll see, again, sort of mirroring Q1, relatively subdued. But then we can now see these early signals of transition to more acceleration in all businesses, driven by the factors that I've described. Shift in headwinds to tailwinds in Syngene, new product launches in the generic business, and of course, liraglutide, the outstanding opportunity there. And in the biosimilars business, continued traction building on the 11% comparable growth that we've seen, and then moving into fiscal 26, where we're eagerly anticipating new product introductions.
Okay, so FY26 is where you could see some real turnaround. Thank you so much, Peter Bains, for speaking with us. That's the management of Biocon talking about the quarter gone by and what they expect coming ahead.